Hi, we're doing income from house property, the important MCQs for the December 2022 tax exam. Now, one of the important amendments that has come, that in income from house property, two houses for any and every individual is exempt. Earlier it used to be one. Now, composite rent of let out property is taxable as, so composite rent, by the very name you can understand that it is the rent of the house and the other amenities that you provide along with the house. So it could be like a service apartment. So if your business is into renting or setting up service apartments, then it will be income from business profession. Or otherwise, if you have another business but you just have one house, then in that case it will be income from other sources. But in no case can it be house property because it is a composite rent. Okay. Next one, Suresh owns two houses. First property was used for running his business and the other was let out at 4,000 per month. Now, the second property was used as his residence. Municipal value of the two houses were the same at 72,000 each year, and local taxes is 10%. Now, very important thing that you have to keep in mind, that first property was used half for running his business and the other half was let out. So now if one half is let out, let's take this. What is the municipal value? 72. We will take only half of that, so that will be how much? 36,000. Okay, and it was let out for 4,000 per month. So this is the municipal value. Fair and nothing is given to you. Only what is given is actual rent received. That is 4,000 into 12, which will give you 48,000. Whichever is higher will be your GAV. So what is be your GAV? 48,000. Okay, now this will be your gross annual value. Gav mein now, Gav less the municipal taxes which are paid. Most important, municipal taxes have to be paid. 10% of the local taxes are paid. So how much is the local taxes? What is the municipal value? 72,000. So you will take 3,600 will be the municipal taxes. They are saying it is 10%. So 10% of what? Of municipal value. Minus 3,600. Okay. They want the income from house property. So you will get your NAV less standard deduction and interest on loan. There is no interest on loan. You do standard deduction 30%. You'll get 31080. Okay. Easy. Just remember the steps, it's done. Okay, for those just want a brush up of income from house property, let's do it. First thing, for SOP it is full exempt, so your NAV is 0. For LOP, let out property, you will start with municipal value, fair rent, whichever is higher. Compare it with standard rent. Whichever is lower will be your expected rent. Compare it with actual rent received, you will get GAV. Then subtract municipal taxes, you will get NAV. Now, from NAV, you will do two deductions. Interest on loan. So here what is important? Municipal taxes have to be paid. Interest on loan and standard deduction. Interest on loan. If it is an SOP, okay, this interest on loan, there is a limit, 2 lakhs. If it is a LOP, no limit. Whatever is paid, you will get a deduction. Standard deduction is 30%. You will get income from house property. Easy. Please keep it in mind. This is how we are going to do it. Now, next question. When shares of a co-owner in a house property is not definite, then what happens? You don't know exactly how much each co-owner percentage is owned. Then it will be taxed as association of persons. Remember this. Okay. Mr. Ahmad acquired a property in April for residential use. The loan interest payable for the year is 2,10,000. If it is an individual, I just told you, interest on loan for SOP, what is the limit? 2 lakhs. If he has paid 2,10,000, also he will get 2 lakhs as deduction. Okay. Next, A borrowed A borrowed 5 lakhs at 12% on 1/4/2017 for construction, which was completed on 15/3/21. The amount is still unpaid. The deduction of interest. So now this is interest on loan. How do you do this? If there is a pre-acquisition period loan, what is pre-acquisition period loan? Pre-acquisition period, you will find out date of loan taken to 31st March prior to completion of construction, date of completion of construction. So what is date of loan taken? 1/4/2017, 31st March prior to date of completion. So this is the date of completion of construction. You don't have to take this date 15th March. You have to take the date prior 31st March prior to date of completion of construction. So that will be 2020. Okay. Now if someone tells you what is the period in number of years, so you will say 17/18, 18/19, 19/20. So you will get 3 years. Okay. Now what is the interest? Pre-acquisition period interest will be how much? So if it is 5 lakhs into 12%, that is for 1 year it is 60,000, into 3 years will be how much? 1,80,000. So what is your pre-acquisition period interest? It will be 1,80,000. But because it is completion of construction, so this 1,80,000 you will not get in one shot. You will get pre-acquisition period interest installment. What is the installment? Divide by 5. $36,000. So I will get this one installment. So over a period of 5 years, I can take this 36,000, this installment plus current year. So I will get this for 5 years, each year 36,000 plus current year interest. What is current year interest? 60,000. How you got? %12 into 5. So what is the total? 96,000. Okay, add both. Pay attention what you did. You took pre-acquisition period interest. Date of loan taken to 31st March. This is very important. You have to take 31st March prior to date of completion of construction. Okay. Now, then you calculate the period. The pre-acquisition period, once you find that, find the interest for that divided into 5 equal installments. Very important. 5 equal installments. That will be your pre-acquisition period installment. And you will always get your current year interest because they said the loan is still outstanding. Okay, got it? Now next one. If you got this, you will get the hang. This is the most important part in this chapter. Okay. DPM Limited constructed staff quarters and let out the same during the financial year. As it is, you know, as soon as you see this, it is constructed for what purpose? For their staff. Okay, it is constructed for what purpose? For the staff. And let out the same. It's rents received by way of rent from employees during the year. Now, in that case, this rent is what? If they have received it, it will be income from business profession because they have let it out to their employees. Okay, now next one. When a house property is let out for monthly rent of 25,000 during the financial year and maintenance by way of sweeper. Now, there is in your chart which we just saw. Did I put anything for maintenance or anything? Obviously not, because all of that is not there. They are giving you standard deduction of 30%. In that, all maintenance, everything will come. Okay, so It is monthly rent is what? 25,000, during which, and sweeper watchman is 6,000. You will not take all of that. Okay, it's understood. So into 12, 3 lakhs minus, this will be your NAV less standard deduction. So you will get 2,10,000. Okay, next one. Mr. Zen owns a flat in Mumbai which was let out by him in the previous year on a rent of 20,000 up to December and for 3,000 thereafter. So actual rent received is how much? 20,000 from up to December. So can I say for 9 months he got 20,000. Then after that 30,000 thereafter. So after December, that is Jan, Feb, March. Okay, so 1,80,000 plus 90,000. So that is 2,70,000 is what is the actual rent received. Okay, there the annual municipal value is 3 lakhs. Fair rent is 2,50,000, standard rent is 2,90,000. Now if you do that, municipal value, fair rent, whichever is higher, compare it with standard rent, whichever is lower. So you will get 2,90,000. Okay, those who don't know how to do this, municipal value, fair rent, whichever is higher, compare it with standard rent, whatever is lower will be your expected rent, compare that with your ER, whichever is higher will be your GAV. Okay, now in this case this is very easy. So this will be your 2,90,000, compare it with your 2,70,000, that is your actual rent received. Easy this is. This will be 2,90,000, whichever is higher. Okay, done. Now next one. Rajendra, non-resident, in the previous year is in receipt of rent from Dubai of 27,50,000. The amount was transferred, credited in the bank and maintained in Vadodara by the tenant quarterly. The annual let out value of the house in Dubai is subject to tax under the head income from house property. And what will be the income? So this is what he has received less standard deduction of 30%. So you will get 27,50,000 minus 30% standard deduction. Don't forget that, you will get 19,25,000. Done. Next one. He purchased, Santam purchased in October with the financial assistance by way of loan by PNB a flat in Chennai to be used exclusively for his own residence. Interest on the home loan is from this 1/4/21 till March 2022 paid by him was 2,18,000. He wants to know the deduction. If it is a residential house used by the own individual for his own residence, that is, it is a SOP, self-occupied. There is a limit on the loan. What is the limit? 2 lakh rupees. Okay, so even if it is 10 lakhs, 20 lakhs, you will take only 2 lakhs deduction. Okay. Pushpal, a non-resident in the previous year, is receipt of rent from Singapore. Earlier some was Dubai. Same kind of questions keep repeating. Okay, the amount was transferred and credited in the bank account of Pushpal maintained with SBI New Delhi by the tenant quarterly. So from 30 lakhs was the annual rent. The rent for the last quarter, that is 7,50,000, was not paid, was transferred. So what is the actual rent received? 30 lakhs minus 7,50,000. Why? Because he is not received it. So actual rent received is how much? 22,50,000. Okay. Now the rental income, which is subject to tax. So now this less standard deduction, you will get less 30%. 3150. Sorry, less I added. My bad. $22,500 minus 30%, 1575. So you will get 15 75. Okay, done, easy. Next one. Sonu had let out a house located at Jaipur to Monu since 1/4/2022 on a rent of 3,000 per month. Monu paid the rent regularly up to 30th of November and vacated the house on 31st of March. So he did not pay rent. Monu paid the rent till November. So he has not paid for December, Jan, Feb, March. Okay, December, Jan, Feb, March. Okay. When it was sold by Sonu. Sonu, after great persuasion, could recover 9,000. So in the year, his actual rent that he received was not entire 3,000 into 12. He got it only for 8 months. Okay. Then for the remaining 4 months, which was unrealized rent, he received it. When did he receive it? Sonu, after persuasion, in July 2021. So that is in the year 21-22. The income for the assessment year 22-23 will be 9,000 minus 30% will give you 6,300. Okay, easy. Now, Sarleka let out a property on rent from August 1st, 2021, which was self-occupied previously for residential purposes. The actual rent was 30,000 per month. The municipal value was 35. The fair rent was the standard rent. Now, whenever, even for 1 day of the year, the house is a let out property. The whole year it will be calculated as a let out property. I'm talking in terms of time. But if one part of the house is a self-occupied and the other is let out, then you will split even the municipal value, standard rent, fair rent that way. But if in time basis, that is in this question, it is given on time basis. So in this case, what I'll do, actual rent was 30,000 per month. But you will take how much? Full 30,000 into 12. Everything you will do as though it is for the full year and not on part basis. Okay, so let's start. Municipal value, fair rent. Municipal value is 35. Fair rent 40. Whichever is higher. Then compare it with standard rent. What is the standard rent in the question? 32,000. Standard rent is 32,000. Okay, so you will compare that, whichever is lower will be your expected rent. Now, what is important? You will take the expected rent and compare it with your actual rent received. So that is 30,000 per month. How much will it be? Whichever is higher will be your GAV. GAV is 32. Okay, you multiply by 12. There are no municipal taxes given in the question. You'll get 3,84,000 less 30%. You'll get 2,68,800. Okay, you'll take 32, multiply by 12 to give you. Okay, then this will only be your NAV less 30% standard deduction. Okay, what is very important over here to remember that even for 1 day the house is held as a LOP. For the whole year it will be held as an LOP. So don't get confused. Okay, Rajesh Shekhar owned 3 identical properties. He let out one property for a monthly rent of 50,000. The other 2 properties are self-occupied. That is fine. Compute his income. So his 50,000 wala property, the house which is he's getting 50,000 per month, will be taxable. So you will get 6 lakhs less 30% standard deduction. So you will get 4,20,000. This is easy. Now see here, Siddharth has 3 houses in 3 different buildings. in Mumbai, and it is used, all of them are used for self-occupation. Remember, self-occupied only 2 houses are allowed. The remaining third one will be taxed. So now, 2 houses at the option of Siddharth will be treated as SOP. The other will be deemed to be let out. Okay. Rajneesh and Amarjit are co-owners of a house having 50% each share, which is used by both. The house was purchased in 2005 by taking a loan. The interest paid by each co-owner is 3,05,000 for the year. The amount allowed as deduction. Remember, I told you interest on loan, how much is the deduction? In a SOP, 2 lakhs. But per individual, it is 2 lakhs, not per flat. So, in one flat, if I am a co-owner and I have paid, like in this sum, 3,05,000, I'll get 2 lakh deduction. The other co-owner will also get 2 lakh deduction. Okay. Next one. A house owned by Megha and located at Jaipur was on rent till it was sold out. She received an amount of 45,000 as arrears of rent from the tenant. Now, if she has received 45,000 as arrears of rent, it will be taxable, subject to 30% standard deduction. So, how much will be 45,000 minus 30%? Will give you 31,500. Okay, now next one. Satish, age 45, is having a house property at Hyderabad. The municipal value is 12 lakh 50, fair rent is 11 lakh. So, what you will take, municipal value, fair rent, whichever is higher. So, let's try and do this orally. Okay, then I'll take this. The standard rent, compare it with standard rent, whichever is lower. Then I'll take 11 lakh 50. He let out the property for 1 lakh 5,000. So I will do this into 12. Compare that, whichever is higher. So you will take actual rent received is 12 lakh 60,000. Rent of the March could not be paid. So 12 lakh, 1 lakh 5,000 I'll subtract, less unrealized rent. So I will remove unrealized rent. What I'll get is actual rent received 115500. Okay, 11 lakh 55,000. He had paid municipal, so this is your GAV. Okay, less municipal taxes. Municipal taxes is how much? 2 lakh 30. That will be your NAV. Okay, he has paid an interest of this NAV less standard deduction 30% and interest on loan. Subtract both. What is the interest on loan? Paid an interest 2,50,000. Now this is an SOP. This is an LOP, hence because it is let out, so there is no limit. Otherwise, if it was an SOP, you would have taken a limit of 2 lakhs. So subtract that, minus 30% minus interest on loan. You'll get 3 lakh 97,500. Okay, you will get 3,97,500. Okay, this is your answer. Now next one. Sangvi purchased the first house at Vijayawada at occupation on for occupation on 10 June for 80 lakhs. Now remember one thing, there has been an amendment. You all can check it out under 80 if you want, under deduction chapter 80 EEA, where if there is a person who's purchased a house which is less than 700 square feet, okay, 680 square feet to be precise, and the stamp duty value of the house is only 45 lakhs stamp duty value, then you can claim a deduction of 1.5 lakhs under chapter 80, deductions chapter. Okay, but here immediately when they say 80 lakhs, your deduction goes away. with bank loan sanction has then paid an interest of 2 lakhs. What is the tax treatment? So you will get interest on loan under 24 to that is 2 lakhs. 80 EEA deduction he will not get. Why he will not get? Because the stamp duty value is 80 lakhs. Okay. Next one. Bhavna transferred the rental income of 1,20,000 to Sneha during the previous year, but she did not transfer in the assessment year property in the name of Sneha. So, if the asset is not transferred, but the income is transferred, even in that case, there will be clubbing of income that will be applicable. So, in whose hands, even though the income is transferred, in whose hands will it be taxed? In the name of the person who the property is still in the hands of. So, in whose name is the property? Bhavna's name. Okay, Bhavna transferred the rental income, but who will have to pay the tax? Bhavna only, because the asset is still in her name. Okay, so we are done with income from house property. We have done all important parts.